A bear market is a time where you see the price of stocks correcting really, really sharply at this time. And generally during this time, nobody wants to really invest their money. They just want to stay away from the market. But it's during this time you need to be selecting some good companies because it's over here you can really make a huge profit. Well, I've discovered three potential very high growth stocks over here, and I'm going to share them to you right away. So without any further ado, let's go ahead with the companies. The first company on the list over here is Anantaraj. Now, what is Anantaraj? Anantaraj deals with real estate and also they're getting into the data center theme. Now, the current price of the stock as of today is 561 rupees and the P ratio is at 55. So, my target price for the company to purchase this company rather would be between 400 and 450 rupees. The target P would be between 40 and 45 would be, which would actually bring it below the industry PE, which would not really enable it to go down by much. The reason the price of the stock is correcting very heavily is because it was trading at a very high P. So 400 to 450 rupees would be the ideal time to buy the stock. Not more than that. I'm making it very clear now itself. If it does drop to levels of 400 to 450 rupees, it would be a great time to acquire some shares in this company because it's a high growth stock and it's got a lot of things moving in its favor and it can potentially go up in terms of valuation in time to come. Now, Anantaraj is, as already said, the median PE was 45, right? That's the reason why I told to buy it between 400 and 450 rupees. So it would come below the level of the median PE. So during that time, the price of the stock cannot really, go down by much. So that's about Anantaraj. The next company to keep in mind is PG Electroplast. Now, the current price of PG Electroplast is rupees 720. PE ratio, as you guys can see, is ridiculous at 100 at the moment. But the target price you need to be buying PG Electroplast is between 400 and 500 rupees, ideally rupees 450. The target P would go to levels about 54 to 68. Now, why this number, you may ask? Well, I'll tell you exactly. The median P for PG Electroplast for the past 5 years has been 52. So that's the reason why I suggested that. Well, PG Electroplast is also a company with very high level of growth potential. Last year, it was trading at levels of just 146 rupees, and from that, it went all the way up to 1000 plus rupees. So, this is a company with a very good capex, very high amount of expansion plans, and in the years to come, the valuation of the stock can go up by many, many fold. So, this level of around 400 to 450 rupees, if it does come down to that level, looking at the way the markets are correcting, there's a possibility it may come down to that level. If it does come down to a level, it would be a very good time to acquire a good number of, shares in the company. Not about it. Now, that is about PG Electroplast. And the last company on the list is Ashoka Buildcon, right? So the current price of Ashoka Buildcon is rupees 247 a share. And just have a look at the P. It's just 7.8. The industry P in its segment is 30. So that's how many times less? That's 4 times less, right, than the industry P. So the target price to buy this company would be between 220 and 240. Even the current price of 247 is not bad, but 200 to 240, if it does correct, that would be an excellent time to actually purchase some stakes in the company. Now, regarding this company, the median PE for the past 5 years was 11, the current is 7.8. But now, because the company is currently trading at a very significant discount to its industry peers, there can be a high potential for this company having a P rating, suggesting the valuation of the stock going up in a very, very big way in the months to come. So, this is about Ashoka Buildcon. So, these were the three companies that are currently available at a very good valuation, and or rather to purchase when they do come down to the valuation I have actually suggested right now, right? But said and done, the stock market can offer attractive investment opportunities. Focusing on the historical valuations and industry benchmarks and help identify the potential winners. Now, we got to understand one thing, guys. I'm not a SEBI registered analyst or anything like that. The stock market obviously involves a lot of risk. So, you must also consult with your financial advisor before making an investment decision. Either ways, these are three companies you all can definitely keep in your watch list. So that's it for me today, guys. You guys take care and have a wonderful day ahead.